Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to yet another promising edition of the Extreme Speed Live Technical Session, your daily dose of financial insights and trading strategies. Well, before we begin the session, let's run through our daily routine to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please feel free to let me know in the comment section by typing in hi. Typing in hi confirms to me that we are all on the same page, and then we shall kickstart the session. So thank you very much, guys, for your feedbacks as I load up my comment box. Thank you very much. All right. So what do we have here? Good morning to you, Spain. Good morning, Hespoiro. Good morning to you. We have Lenny in the house. Good morning. We have Choncha Sawami. I hope I pronounced that correctly. Good morning to you. Hello, Carrie. Good morning. Trust you're doing very well today. Dudu, how are you doing? Hello, good evening, Papa Rahel. Who is from Italy. Good morning to you. Leonardo Divi, my friend. Good morning. Trust you are doing very well. Panoyo621. Wow, glad to have you around with us today. Okay, I think with this handful of feedbacks, I will take this as a confirmation that you can all see my screen and, of course, hear my voice loud and clear without distortion. And it's on this note I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be delving deep into the financial landscape using simple and, of course, basic fundamental tools such as trend lines, key levels, and, of course, chart patterns to unravel the potential trajectory of price action for today. Well, it has been a mixed of reaction in the last 24 hours as we had some couple of losses. We had one on XAUUSD, and we also had another one, I think, on I think it's on XAUUSD, and all other assets did fairly well. And one of the reasons why we witnessed this is due to the anticipation of the CPI data, which is coming up later today. And as a result of this data, we've seen how the market has been consolidating in the last 24 hours. Major key players stepping aside, waiting for fresh impetus from the CPI data, which is coming up later today. So we are going to be taking all this into consideration while we review the current market structure from a technical standpoint. So I encourage us all to stay tuned in. Grab your beverage, your favorite beverages, or a bottle of water, your popcorns, or whatever thing you can munch on, and let's get prepared for today's trading session, which promises to be another exciting one. And for those of you who are joining us for the first time, I'm very sure you're wondering what this is all about. Well, a quick one. As technical traders, we gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. This session officially kickstarts 10 a.m. UTC, 11 a.m. West African time. And in fact, I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. Remember, my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, remember that the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I do welcome you all on board and encourage that you engage in the comment section. So with that being said, here we will be diving right into the business, and of course the first thing we normally do in this community to kickstart is to check on the economic calendar. And for those of you who have been with us for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, on the economic calendar, based on the assets on our watch list for this week, we have been focusing on our impactful event from both the United States and the United Kingdom economic docket. Well, throughout the course of the week, we had some impactful events, which are majorly speeches from both the United States and the United Kingdom, which of course had sent a little bit of uncertainty into the market, which we, of course, we will be deliberating on later on when we're talking about this asset. But for today, Thursday, January 11th, we have one impactful event coming in about 3 hours from now from the United States, and that is the consumer price index. Now, for those of you who do not know what this is or how important this is, well, the consumer price index is a measure that examines the average change in prices paid by consumers for goods and services over the last month. A higher than expected CPI can lead to concerns about inflation, impacting market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices. Now, if we look at the data we have here from the month on month for the month of December, month on month for the data excluding food and energy, and year on year, you will see that the previous data are a little bit higher. We have 0.1%, 0.3%, and 4% respectively on this data for the previous one, and we have consensus projecting 0.2%, 0.3%, and of course 3.8% respectively. So what is the data going to be like today? Well, we will be anticipating, looking for what will it come in just as expected, below expectation, or even beyond expectation. But one thing for sure is that we do know that as technical traders, this event here has a tendency, the anticipation of the event has a tendency of influencing the market sentiment, which in the long term we will see on the chart, reflect on the chart as price action. So what we are going to be doing now is to look into the chart to see if we can identify technical setups like patterns and structures that we can use to position ourselves for the next move. And one thing we also want to note here, that today being the waiting for the CPI data, we are likely going to be seeing some volatile move today. So we do want to position ourselves very well to capture this move. So I encourage you to stay tuned in so you don't miss out on all of the valuable ideas we will be talking about today. And in fact, I'm loving the energy in the comment section as I see comment from Jan, Kolesarim, 64393353, Xerox24, Murdoch, Milos Bez, HowDX Pritam, Haki88, Nikki774, and Tisha. All of you are just too wonderful, and thank you for checking in the comment section. So with that being said, let's dive right into the business. And the first asset we are going to be looking at, as usual, is going to be the US All Sport. And so far this week, the US All Sport has been one of the most performing assets on our watch list for this week, as we had during the course of the last 3.5 days sold at some point, and of course bought at some point in time. And in fact, price did move significantly well in our direction at both instances. So let's look at how the week started for us. Let's refresh our memories as to what happened at the beginning of the week. And of course, this will also give those who are joining us for the first time the privilege of being on the same page with us. So at the beginning of the week, the US All Sport started on a bearish note, as we saw how price action started at around the $73.75 level, giving us a beautiful range to guide our trading decision for the week, as we saw price confined within the $73.75 level and of course the $72.65 area to give us an insight into the level of indecision at that point in time. And of course, whenever we have this kind of situation in the market, we usually exercise patience, waiting for either the breakout or the breakdown of the resistance line to give us an opportunity to either buy or sell. Well, at the beginning of the week, we capitalized on the breakdown of the support line here, right below the $72.65 level, giving us our first sell position for the week. And of course, we rode that move all the way to the downside, moving over 260 or 50 pips thereabout before the bullish momentum came in. And of course, you know how we do it in this community. We obviously mentioned this countless of times, that whenever price action moves significantly well in our favor, we ensure that we move all stop losses accordingly to secure the current position. And if you have done that appropriately, you must have been taken out with a modest 150 pips thereabouts in this particular trade, and well done to everyone who capitalized on that one. Then right here on Tuesday, we begin to notice our price action transition into a consolidation phase just around the $71.20 level, and of course the $70.40 area to emphasize the level of indecision at that particular point in time. And even on Monday, we did mention that as we sell the US All Sport, that we want to take note of how price action will react to this ascending trend line we identified on the higher time frame, and that if we see buy pressure resume around that area, we will be looking out for buying opportunities. Now, okay, I can see backdoor mentions here that fix the audio. I'm hearing double. Oh, really? Let me check this out one more time and see. Things are going on fine from my monitoring device here. I will advise that you probably restart your app and let's see how it goes from there. And if anyone else in the house can tell me if he's also experiencing the same thing, then I will probably do some changes here. But for the meantime, I think things are going on fine. So backdoor, I will ask you to probably refresh your app and let's see how things are going on. All right, thank you for the feedback. Now, moving on, so we saw here that price action was right around the ascending trend line. We said, depending on what happens here, will determine if we are going to be continuing the downtrend or get ready to buy. And of course, if you zoom in to see what happened around that area, we saw how price transitioned into what looks like a reversal pattern in the form of a double bottom structure, where it became evident that sellers we're finding it difficult to break down the previous low at the $70.40 area. Now, with the neckline around the $71.20 level, we did capitalize on the breakout of the neckline around the $71.20 level to emphasize the strength of the buyers here. We did join the bullish momentum all the way to the upside, and in fact during our live session on Tuesday, I did mention that for those of us who capitalize on that move your stop losses accordingly so you can secure the current position. And if you had done that, we had a reasonable amount of profit on that one. Now, during our live session yesterday, we saw that the bullish momentum was still looking very evident based on the current structure, and we decided that we will continue to buy this asset. And remember to guide our trading decisions yesterday, we did identify an ascending trend line right here to guide our trading decisions for yesterday. And we said as long as price remains above the ascending trend line, we continue to look out for buying opportunity. And the only condition that will make us to sell is for this ascending trend line to be broken to the downside. Now we saw price remain above the ascending trend line, and remember we did said we would have a buy stop order above the $72.65 level to maximize the bullish momentum. We also added another level around the $73 area to continue the trend to the upside. And at that point, we had about 2 positions running during the New York session yesterday before the bearish momentum came in. And I hope you moved your stop losses accordingly. If you had done so, you must have been taken out in a worst case scenario break even, as price did not really move that much on those trades. Then we saw price break down both the ascending trend line and that level at the $72.20 level, where I said if you are a counter trend trader or a scalper, you might want to capitalize on that move, as we saw price move about 100 pips, I think, into that $71.20 level. Remember, I mentioned I will not be selling this one, that I will wait to see how the market is going to be reacting to the $71.20 level. And in fact, if you had positioned yourself very well around this area and with the emergence of buy pressure around that structure, it will have given you an opportunity to join that uptrend continuation. So it has been quite a profitable trade for us since the beginning of the week, as the recent buy position right now is currently running with about 150 pips. And if you had added positions with the levels we did identify on this chart, you will definitely have maximized your profit on this particular asset. So as it is right now, I want to encourage us all to move all stop losses accordingly, secure the current buy position as we anticipate the CPI data coming up later today. Now, safeguarding your existing buy position right now seems very, very reasonable, as oil prices appear to reclaim grounds lost in the later part of the New York session yesterday, extending into the Asian session. Now, from yesterday, remember we were talking about looking forward to the EIA report. The Energy Information Administration report from yesterday revealed a 1.338 million barrel increase in crude oil stocks, contrary to the expected 0.675 million barrel decline. In fact, this was a very, very wide margin, and this led to the exerted down pressure on oil prices we witnessed that broke down that ascending trend line and the 72.20 cent level. And during the later part of the New York session stroke the Asian session, we're beginning to see market participants reassess their decision as they digested the implication of that data from the Energy Information Administration. However, in addition to this, we begin in the last 10 hours, crude oil prices have shown upward momentum, as you will see. After testing the $71.20 area, we begin to see price climb up, and you want to be wondering why this has happened. Well, Due to the concerns about potential supply disruption following recent development, the Yemen's Houthi criticizing the United Nations resolution on Red Sea navigation, have also ignited fears and fueled upward momentum in crude oil prices. And it's important to note that the levels we have here will definitely be guiding our trading decisions for today. Now, before we go into the technical details of what to look out for today, I would like us to run through the higher time frame to have an holistic perspective into what is going on in this market. And at the same time, this will give those who are joining us for the first time the opportunity to be on the same page with us. Now, scaling up into the daily time frame, which of course was where we started our analysis for this week, what we did on the daily time frame was to consider the nature of price action in the last 4 to 5 months, and that was since September of last year. And what we saw here was quite clear that price action has been on a downtrend scenario, and as a result of this observation, we did connect the series of lower highs, giving us this beautiful descending trend line to work with ahead of this week. And despite the strong bearish momentum in this market, we begin to notice something strange during the course since the beginning of the month of December. We saw that despite the strong bearish momentum, sellers were finding it difficult to break through the $69 area, and this continued into the early days of this year as we saw another sharp rejection, as the inability of sellers to break down the previous low was a sign that buyers may gradually be gaining momentum behind the scenes. And in fact, the transition of price action evolved into what is looking like a potential reversal pattern in the form of a double bottom structure. Though this pattern is yet to mature, but we have a potential that this is likely going to be inciting a reversal setup. So we did have our neckline somewhere between the $75.50 level and our key level at the $74 area, where we are expecting a breakout retest of the structure to give us an opportunity to join that uptrend move. And in fact, what makes this neckline very interesting is the fact that it also shares a beautiful confluence with those descending trend lines we spotted earlier. So if price can break out of the neckline, it would also have taken out the descending trend lines, giving us a sign that the trend line may no longer have the capacity to negate the bullish attempt anymore. So this is becoming more interesting, and with the recent buy pressure we notice here, in fact we can see it clearly on the 4 hours time frame. Let me zoom right into the 4 hours time frame so we can see it. So you can see right here on the 4 hours time frame, since the beginning of the month of December, you will see we have an ascending trend line buttressing the strength of the buyers in this market. Now, despite the strong bearish momentum since the beginning of this year, price was unable to break down the ascending trend line, which further buttresses that we could be seeing an accumulation zone at this point in time. Now, the question here is, how far will this momentum go for this week? Now, scaling down into the 1 hour time frame, we begin to see things more clearly. And since we already have a buy position earlier, I did mention that we should move all stop losses and secure the current buy position. And in fact, the last hour, we saw this engulfing bullish candle, which further emphasized the strength of the buyers here. And right now, as it is, we are back at a crucial juncture. Now, you will be wondering, what do I mean by the crucial juncture? Well, first of all, remember what we saw at the beginning of the week. We saw this range where price was confined within the $73.75 level and the $72.65 area, where we had our first sell position at the breakdown of the support line of that range. And since the breakdown of the support line at the beginning of the week, we have seen how that area had become a strong selling niche, as every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. And not until yesterday during the New York session we had a little bit of attempt by the buyers which successfully broke out of the $73 area, but was immediately met with that bearish momentum which came in as a result of the report released by the Energy Information Administration revealing a 1.338 million barrel increase contrary to the expected 0.675 million, which caused an instability in the market, pushing price back to the downside. And right now price is back into that area, and in fact in the last how many minutes now, in the last 30 minutes we've continued to see price oscillate around that area. Now the question at this point is, how will the price perform at this level? Will this level become a new platform for new highs, or will selling pressure persist here to push price to the downside again? Now, to position ourselves for the next move, I am looking forward to more opportunities at the breakout of the $73 area, and in fact if price can continue to climb new highs, a breakout of the highest point for this week at the $73.75 level will welcome more buy position. And in fact, if price action can break out of the $74 area, that is our key level for this week, which also doubles as our neckline, which we did identify on the daily time frame. This will further emphasize the strength of the buyers in this particular market. So at this point in time, we continue to maintain a bullish bias in the market, coupled with the fact that price action remains above this ascending trend line we spotted on the higher time frame. So I maintain a bullish bias on this one, and for those of us who capitalize on the buy position here, I did mention earlier that we move on stop losses and secure the current position. And I want to quickly state something here, that we could see some selling pressure come in as a result of profit taking activities in the meantime, maybe retrace back into the $72 area to further incite new opportunities to buy. So let's keep this in mind while we continue to maintain a bullish bias in this particular market. And to make things easier for us to be able to manage this current position here, let's mark out a trend line which we will use to guide our current buy position. So if we do this correctly, you will see that we have a new ascending trend line. So let me delete these other ones as they are no longer necessary. And I would like to thicken this color to emphasize its importance at this juncture. So we have this trend line right now. I encourage you to mark it out on your chart, as you all know how we use our ascending trend lines in this community. As long as price remains above the trend line, we continue to maintain a bullish bias in this market. So we could still see a situation where price could retrace back to test the trend line in anticipation of another wave of bullish momentum. Now, in as much as we're looking out for buying opportunities on the US All Spot based on the fundamental factors we saw and the anticipation of the CPI data, we cannot ignore the potentials that sellers could still come in as well. Though price is yet to find a new low, as we can see, there's the lowest point for this week. Price is yet to break down that low. And for me to consider selling this asset, I would need price action to take out that previous low, taking out the $70.40 level before I can feel confident to sell the US All Spot. However, if we consider the distance between this ascending trend line and this support line, that's over 160 pips there. So are we going to miss out on the 160 pips move if price is planning to come to the downside before we join that breakdown of the $70.40 level? Well, no. I want to see if there are chances for us to join even before the breakdown happens. So for me to join, I want to see significant confirmations that sellers are going to be dictating the pace. And one of the signals I want to see is price breaking down this ascending trend line. Now, remember that we are not going to be getting too excited. We are not jumping in right away, as we will need some confirmations to really happen before joining that trade. And what confirmation are we going to be looking out for? Well, the first one is price coming back to retest the structure. If it does come back to retest the structure and we see how it has become difficult for buyers to climb above both the ascending trend line and the $72.20 level, then we can start considering selling. And of course, this would reflect as a retest, continuous selling pressure below that structure. Then we can actually join that decline. And while we join the decline, let's ensure that we are on standby to move our stop losses accordingly to secure our positions as price moves in our favor. And if price goes on to break down this ascending trend line on the higher time frame that we did identify, retest of that structure at the $71.20 level will welcome more sell position, and then a sell stop order below the $70.40 level will be all we need to maximize the potential of that bearish move. Though I doubt if this is going to happen today, but if it does happen, let's be on standby to capitalize on that opportunity. So this is my view on the US oil spot for today, and we can all see how crucial those ascending trend lines are in guiding our trading decisions for today. So I advise and encourage you to mark out the trend lines and of course these levels, as we will be needing them to guide our independent trading decisions for today. So this is my simple view on the US oil spot. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next assets on our watch list. All right, so I can see a couple of comments here in the comment section. From Backdoor is yet to respond to my response. I need a feedback from you. I see your comment from Ashitaka. Ashitaka says double audio, it's extra app problem, not broadcast. Oh, I see. But from my own end here, it's not doing so from the app. Please, I would like to get your feedbacks on this one. Things are looking quite fine from my app here. I probably will suggest you restart the app or restart your phone in that regard. Please let me know if this still persists so we can contact the technical team in that regard. Maxim74, good morning to you. Lion Girl, I like that name. Good morning. Metal Slug X, good morning to you. And Palo 2, good morning to you too. Okay, I still look forward to your feedbacks anyways, but in the absence of no questions, I will move on to the next assets on our watch list. All right, so the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. Now, on the NASDAQ, we have seen a tremendous move of buying opportunity since the beginning of the week. We've been buying this asset, and at no point in time did we have any opinion of considering selling, as price action continues to find higher high, as attention will turn to the US Consumer Price Index coming up later today to determine if the rally can have more legs to run. Well, thus far, the market's still looking very, very bullish here. Let's see how the week started for us all in this community. As you will see right here, at the beginning of the week, we had a beautiful range where price was initially confined within the 16,342 and the 16,275. In fact, this lasted about 12 to 16 hours before price finally broke out of the resistance line of that range to give us our first buy position for the week. And remember that we did talk about adding more position if price action ever breaks out of the 16,400, which of course it did, maximizing the potential on that bullish move. And in fact, as at Tuesday morning, we already had a maximum of about over 300 pips we caught here as we took advantage of over 350. You remember we moved our stop loss to somewhere below the 16,560, which got it on Tuesday's New York session, and we were taking out on all the buy positions. Now on Tuesday we talked about a new range where we said we saw that price action was ranging, that is between the 16,650 and the 16,560, and I did mention that I'm of the opinion that price is likely going to continue to the upside, where we shall be having a buy stop order again above the 16,650 to capitalize on the uptrend continuation. And for counter trend traders and scalpers, I told you that you might want to capitalize on the breakdown retest of the 16,560 right here if price will break down and retest. And I told us that I will be refraining from selling because of the nature of the structure. But if you feel comfortable capitalizing on counter trend opportunities, a breakdown retest could be a beautiful opportunity. Though price did break down, of course, moved over 50 pips before it was taken out of that position to now trigger that buy stop order above that level. And during our live session yesterday, we did identify this one too as well. We talked about the 16,715, where we said price breaking out of that structure should welcome more buy positions to our existing trade. And if you had capitalized on that one too, well done and kudos to you, as currently you will, if you still have your buy positions intact, currently you will be having one. The first position is currently running with about 200 pips, while the second position is currently running with about 140 pips. So we have roughly 340 pips running right now on a minimum of two positions. And if we had that to the over 300 pips we had at the beginning of the week, we are roughly above 600 pips in total since the beginning of the week. So I will consider the USTech100 to be the most profitable asset on our watch list for this week. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, as it is right now, we are transitioning into another zone right now, especially when we're looking forward to the CPI data, which definitely is going to be having an impact on the market sentiment. Now, what we want to see now is how the market is going to be anticipating this event. And I usually have this opinion that when such events are coming up, there is a high chance that the inner circles closer to the department that are going to be releasing this result will be aware of what this data will be, and because of this awareness of what the data will be, they will be building up a position ahead of this event. And as technical traders, what we do want to do is to see if we can identify a structural setup that we can use to position ourselves for that move. Now, if you look at the way things are going right now, we already have a highest point, which is at the 16,900 level. So I do want us to mark out that level, as it's going to be playing a major role in guiding our decisions for today. So mark out this level on your chart. As I'm doing that right now, we have the 16,900 area. Now I want to have a buy stop order above that structure that will make me capitalize on that uptrend move if price action will ever break out of that structure. Now, in addition to this one, you will see that we also have a range. So I'm even wondering where I would like to put this within this area. So we have the 16,830. and we also have the 16,820. So can we put it right within the between the two? So let's have it as 16,825. So we shall label this one too as well, 16,825. All right, so let me do that quickly. 16,825 just right below. And what we are going to be doing now is, since our center of focus for today's trading session is going to be between this range where we are likely going to be seeing some consolidation happen for a while before price action will either break out of the resistance line or the support line for trading opportunities. So what we are going to be doing here is to exercise patience, and for those who still have a buy position at this juncture, kindly move all your stop losses, secure the current position anywhere below the 16,825, and the 16,800 seems most appropriate to move all stop losses to. And remember to give enough breathing space for price action to move around. So with a well secured position at this juncture, let's continue to exercise patience and wait to see how the market will react to this newly identified range to give us an insight into where price will be going. Personally, having a buy stop order above the 16,900 makes quite a lot of sense. And if you are a counter trend trader, you might want to capitalize on the breakdown of the 16,825. Let me extend this ascending trend line a little bit. Let's see. Let's extend it out. Now look at this ascending trend line here. See how it had played a major role since last week Thursday. You see, connecting the series of higher highs and higher lows. Here we have a trend line to work with, and in fact, if price action will break down the 16,825, we could see some profit taking activities happen in this market, leading into a retracement move, maybe back into the ascending trend line, which will dovetail to about 190 pips, maybe in anticipation of another wave of bullish momentum. And in fact, if price action breaks down the structure, we could see another wave of selling opportunities. So if you're a counter trend trader or a scalper and you're willing to take a counter trend opportunity, then a breakdown retest of the 16,825 could incite a sell-off into that trend line. So let's see how the market will play out here, and if price breaks out of the 16,900, we'll look out for buying opportunities. So for today, let's focus on this zone between the 16,900 and the 16,825 for new trading opportunities. So this is my simple view on the US Tech 100 for today. Let's see how the market will play out, and of course I will definitely if you exercise patience and allow your structures to mature, you will definitely be on the right side of the market. So if you have any questions, feel free to let me know in the comment section, and I will take the next 5 to 10 seconds, let me say, because I'm running short of time already, to see if there are any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page. I think I have to just refresh my comment box here. I'm doubting if there are questions after. Okay, I knew it that there will be some questions, so I had to refresh my page. So I see a comment here from Storm. Storm says that how about GBP JPY? Oh, well, unfortunately, The GBP is not part of the assets on our watch list for this week, so I wouldn't be able to take it. And I usually mention here that the most appropriate time for you to give us assets are on Monday morning, when you have the privilege of submitting whatever asset you want us to look at for the week, and then we will incorporate it into our plans and ensure that we monitor it throughout the course of the week. So I encourage you, Storm, to come around on Monday morning, drop this if you want us to look at the GBP you can drop it on Monday, and I will try to incorporate it into our plans for that week. All right, I hope you understand, and thank you very much for understanding. All right, so in the absence of no further questions, I will be moving on to the next asset on our watch list. So the next asset on our watch list is the GBPUSD, and right now, wow, I'm already taking out of my buy positions. Remember, we've been buying these assets since the beginning of the week, and in fact, we did take advantage of another buying opportunity after price broke out of a key level at the 1.272 one more time again during the New York session yesterday, and I do hope you capitalized on that opportunity as we saw price move from the key level, moved about 55 pips in our favor, and remember, we did add more positions at the breakout of the 1.273, moving another 44 pips. That's roughly 100 pips in total on that one, and the third one moved about 10 pips thereabout before this bearish momentum came in, and I'm very sure you must have moved your stop losses accordingly, like we always preach here in this community, that whenever price action moves significantly well in our favor, we definitely want to be moving our stop losses accordingly. And if you have done that, well done, and kudos to you for being on for moving your stop losses accordingly. Now, at this juncture, no one should be in any trade right now as regards to our plans from yesterday. However, things are looking very interesting right now as everyone is looking forward to the CPI data coming up today. And the weaker US dollar and increased risk appetite in the market are helping the pound sterling to gain value. Yesterday, the New York Federal Reserve President Williams mentioned that the US interest rate will need to stay high for some time until the central bank is confident that inflation will return to the 2% target. Well, for me, I don't buy into what this statement at all. I'm of the opinion that he said this to make the US dollar afloat prior to the CPI data, as this statement is contradicting to what other federal officials said within the last 1 week, as everyone was already betting on a rate cut as early as March of this year. Now, with the statements now, it's beginning to make things a little bit dicey at this point in time. Now, on the other side of the pond, we had of the speech from the Bank of England Governor Andrew Bailey, and what surprises me during the speech was the fact that he didn't comment on interest rates at all, but he emphasized the need to bring down inflation and also expressed hope for continued lower mortgage cost, which for me is quite surprising, especially during the course of last week when we were hearing that leading business owners in the United Kingdom were clamoring for the Bank of England to cut down interest rates, as these current high rates are really affecting businesses, affecting the labor sector, the manufacturing sector, and of course the service sector as well. And coming up yesterday, not to mention anything about interest rates was very, very surprising. But I held on to that last statement, that emphasizing the need to bring down inflation. Well, if we jump into conclusion, that statement alone was the only way they want to, the Bank of England will want to curtail inflation rate is by increasing interest rate. And for me, this is a possibility that we could have another rate hike in that regard. Well, from a technical standpoint, the GBPUSD's bullish trend remains very intact from the perspective of the higher time frame. So if we let's quickly run through the higher time frame and see what is going on there, and of course refresh our memories as to what we saw at the beginning of the week. Now, if you look at the higher time frame on the daily time frame on Monday, when we started our analysis on the GBPUSD, we had a beautiful setup on this chart after taking into consideration the nature of price action in the last 6 to 7 months. And the first thing we noticed here is how that area between the 1.28250 level and the 1.27200 area had played a major role in pushing price to the downside since the month of August. Look at what has been going on here. Selling niche, can you see? Selling niche, every attempt by the buyers to break out of the structure has strongly been met with resistance from the sellers, as you will see here. Fast forward into the month of November, the same thing persisted. Last month too as well, the same thing also persisted. And in the last 1 week, we have continued to see selling pressure around that area. And to guide our trading decisions for this week, we marked out our key level at the psychological area at the 1.27200 area. And we said if price continues to trade below the key level, we'll look out for selling opportunities, but the breakout of the key level will definitely welcome buying opportunities. But the fact that price action has been bullish in the last 3 to 4 months, as you will see with this ascending trend line here and remaining above the ascending trend line, this buttresses the strength of the buyers. Hence, we were looking out for buying opportunity, and at no point in time during the course of this week have we considered selling because of the nature of price action. And for me to sell this asset, I would need price to break down this ascending trend line to the downside to incite a sell-off. But the fact that price remains above the ascending trend line and that key level at the 1.272, we're still considering buying opportunities around this area. Now let's look at what has been going on since the beginning of the week around this key level at the 1.272 to see if we can identify a structure that we can use to guide our trading decisions for today. Now, scaling back down into the 1 hour time frame, this is what I saw today. Let me zoom this in so we can see things clearly. So this is what I saw today after taking into consideration the nature of price action in the last 36 to 48 hours. You will see price had consistently found higher highs and higher lows. And as a result of this, I have this ascending trend line indicated after connecting the series of higher lows. Though we had a breakdown here at some point, that was yesterday, but since price broke above the ascending trend line, price has remained above the structure to emphasize the strength of the buyers. And in the last 50 how many minutes now? I think last 57 minutes, we have seen price action come back into the ascending trend line and has since been oscillating around that area. Now the question as we head into the New York session today is, will price respect this ascending trend line one more time to incite an uptrend continuation, or are we likely going to be seeing price drop down, retest to break down the key level at the 1.272 to incite a sell-off in this market? So you would agree with me that we are at a crucial juncture in this market. We are depending on how what happens with this ascending trend line will determine what our next line of action will be. So as a result of this, I want to mark out a trend line around this area. I'm in fact looking for a psychological level. Beautiful 1.27400 area is going to be serving as a major confluence for us to guide any trading decisions from this area. So you do want to be marking out these levels on your chart. So we have the 1.27400 level, which interestingly shares a beautiful confluence with that ascending trend line. Let me zoom this in so we can see things clearly. So what I want to see here is a form of a reversal setup just right around or below or anywhere around this trend line, something like a double bottom structure around this area. If we can find one, a breakout retest of the neckline will be all we need to join an uptrend continuation. And if price continues to climb and find new highs, breakout of levels such as the 1.27650 and the 1.2765727 27750 level will welcome more buying opportunities here. So we continue to maintain a bullish bias on this particular asset, as you will see here. So I strongly believe price will continue to the upside from here, and if we are taking any opportunities from this area, please give enough breathing space for price action to move around. So I will be suggesting somewhere around the 1.27200 level, our key level for this week, to place all stop losses for the first buy position above the 1.274. So this is my view here on the GBPUSD. I maintain a bullish bias here, but if at any point in time price drops significantly, I want to be looking out for selling opportunities below the 1.27200 area. So let's mark these levels out on our chart and let's exercise patience and allow the structures to mature before jumping into any position. And if you have been profitable with us since the beginning of this week, you can simply place a buy position up anywhere above the 1.27 right away without even waiting for the reversal setup to mature before jumping into any position. And if it doesn't work out, you know that you're only risking some of the profits you had made so far this week. So let's see how the market will play out, and we shall be back here tomorrow to review how well this asset have been doing. If you have questions, feel free to let me know in the comment section. Unfortunately, I wouldn't be taking the time to wait for your comments, but I will obviously be checking the comment section. I will attend to them at the end of the next asset we are going to be looking at. So moving on. So the next asset we are going to be looking at right now is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And you will see that since Tuesday's trading session, in fact since the beginning of the week, price action has been consolidated. In fact, we have seen price trapped within the 2040 and the $2017 area since the beginning of the week to emphasize the level of uncertainty in this market. In fact, we had a couple of losses on this particular asset since the beginning of the week. We had the first loss here after capitalizing on this buy position, had the breakout of the 2035 level that was right here on Tuesday. And during the New York session yesterday as well, we had another buy position, which of course also went into a stop loss. And we definitely know why this is happening, as majority of the key players in the market are not ready to place any aggressive bet right now, as they step aside to wait for the CPI data for fresh impetus to guide the next move. However, we saw some gold appears to rebound during the Asian session, as we saw the gold asset find renewed demand around the 2020 and the $2027 area during the Asian session. And if you had capitalized on this move at that point, well done to you. I wasn't able to take advantage of this, as this time zone was midnight in our own end, so I was definitely fast asleep when this of course happened. But I still intend to capitalize on more opportunities from here, as I still think price is going to continue to the upside. Now, this resurgence in gold buying is partly due to some repositioning trades ahead of the crucial US consumer inflation figures, which are weighing on the US dollar and supporting safe haven assets such as the gold. Now, the geopolitical tensions from the Israel-Hamas conflicts and concerns about a sluggish recovery in the Chinese economy are also keeping the price of safe haven assets such as gold very stable. Additionally, comment from New York Fed President John Williams yesterday suggests that the US interest rate will need to remain high for a while leading investors to scale back their expectations for a Fed rate cut in March. Now, this has resulted in elevated US Treasury bond yield, which may discourage fresh bullish bets on safe haven assets like gold. So as a result of this, market participants may opt to wait on the sidelines ahead of the release of the key US data, which could provide clarity on the Fed's rate cut path. So for me, today, if we see a stronger US CPI print, it is expected to give the Fed more flexibility to maintain higher interest rate for a long period of time, potentially strengthening the US dollar and causing the gold to break through the previous low, which we identified at the 2017 at the beginning of this week. So, looking at things from a technical standpoint, how do we intend to capitalize, or how do we intend to factor in all this information into our technical expectation? Well, if you look at the structure, I already identify a new demand zone around the 2020 and the 2027 zone. Of course, if you look at what has been going on in this market since Monday's trading session, you will agree with me how the $2027 area had become a resilience barrier for sellers in this particular market, as every attempt by sellers to break through has always been met with strong resistance from the buyers. In fact, yesterday during the Asian session today, we saw some deep buying around this area. And in fact, if you are taking advantage of this one, well done to you for capitalizing on this opportunity. And for those who bought from this demand zone, I will encourage you to move your stop losses right now. Let's secure this current position as we look out for new opportunities. Now, to guide our trading decisions for today, what are the things we want to see on this chart that will make us feel confident either buying or selling this asset? Well, first of all, right on the 1 hour time frame here, this is the first thing I took into consideration after looking at what has been happening since the beginning of this year. You will agree with me that the price of gold has found a downturn, as it has consistently found lower highs in this market, and as a result we have a descending trend line to work with. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that supports the idea of selling that particular asset. And as it is right now, though price still remains below the descending trend line, but I'm of the opinion that since price has been finding it difficult to break through the 2027 and $2020 area, we might be seeing a high tendency of a breakout of that descending trend line. So for me, if price can break out that descending trend line, then I want to be getting ready to buy this asset. Now, one interesting thing about that descending trend line is the fact that our key level for the week, which was situated at the $2,035 area, shares a beautiful confluence with that descending trend line. So if price breaks out our key level, price will also have breached the descending trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, hereby welcoming buying opportunities in this market. So I'm looking at buying above the 2035 area. Price breakout retest the structure. I'm looking out for buying opportunity. We have reasons why we are doing so. Price remains breaks out of the descending trend, and that is 1. Price remains above a new demand zone, that is 2. And of course, the inability of price to break through the 2020 and 2027 area further supports the idea of buying this asset. And I look forward to adding more position, maximizing the potential of this bullish move at breakout of structures like the 2040, $2,046.50 level, and of course the $2,050 area. We have multiple of 4 entries here to maximize the potential of this bullish move. So I encourage us all to mark out those levels and let's see how the market will play out from here. So I hold on to a bullish bias unless we have a situation where price takes out the previous low at the 2017, and like I said yesterday, I do have a sell stop order sitting below the structure to capitalize on any situation if price will break down that area. However, looking at the structure, we might have the privilege of selling below before that structure is broken to the downside. But because of the barrier here where we have a new demand zone between the 2027 and 2020, we need to be very careful and only sell at a site of a significant structure like series of lower lows and lower highs below the 2027 on our lower time frame for us to feel confident to sell, and then have a sell stop order below the $2017 area to maximize that move to the downside. So let's see how the market will play out here. Trust me, if you allow your structures to mature, you will definitely be on the positive side of the market. So it's on this note I would like to round off on the XAUUSD, and if you have any questions while I'm rounding off, you can drop them in the comment section, and trust me, I will attend to them in due time. So far today we were able to take on 4 major assets, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, where we were able to identify simple setups using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. And I do hope you marked out your levels accordingly. If you do, please exercise patience and allow the structures to mature before you jump into any positions. I know this week hasn't been as rosy as expected, and we all know why the market has been so sluggish this week, and it was due to the expected CPI data which is coming up today. And of course, because of this, I'm very sure we are going to be having a strong volatility in the market today, giving us the privilege to recoup whatever loss we have incurred so far, especially on the XAUUSD. And in fact, I wish you best of luck on this one today. And for those who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of the subsequent editions as we come here again tomorrow to review how well these assets have been doing. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. And always remember that every decision we make in the financial market is an educated guess, and in that regard you want to ensure you have a well-defined risk management strategy in place, which must be consistent with all trades you take from your portfolio. And it's on this note I wish us all the best of luck. I see your smiley, your emoji, Leonardo DV. Thank you very much. Niman T, I'm not sure I understand what you stated there. That is why I didn't respond to that. Okay, and in that regard, I want to wish us all the best of luck today. Trade smart. I look forward to seeing you same time tomorrow, 10 a.m. UTC. 11 a.m. West African time, as we come here again tomorrow to review how well these assets have been doing, and at the same time prepare ourselves for tomorrow's trading session, which promises to be another exciting one, as majority of participants in the market will be rounding off their trading activities ahead of the weekend. See you all tomorrow. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye. Bye.